Dear guests, please take your seats as we're about to start the final session here in the center stage, Perfect Storm, Crypto Regulation after FTX. Regulation is at the core of the industry, and as regulators tighten and evolve, the industry must adapt to stay afloat and thrive. Let's welcome the moderator, Erwin Voloder, Head of Policy at the European Blockchain Association, who will introduce his panel. Erwin, welcome. The stage is yours.
And thanks everyone for being here and for bearing with us. I know the day is getting long in the tooth, but we'll try to make it as informative as possible. So again, my name is Erwin Voloder. I'm the Head of Policy at the European Blockchain Association, and our panel today is crypto regulation after FTX. I think it would be probably important to say that these series of punctuated equilibria that we've had started quite a bit before FTX. We had a huge market shakeup in 2021, 2022. And since then, we've seen the proliferation of regimes that are, both bespoke and generally provisions. And I think that with regards to what's happening in Europe and in other regions around the world, it'd be good probably first to start with an introduction from everybody else, and then maybe get your thoughts on, let's take it a step back even before FTX. What were your thoughts in 2021, 2022 when the market took a dive? And what did you think in terms of what the outcomes were going to be from that?
Thanks. Hi, I'm Stephanie. I am head of UK for Gemini. For those who don't know, Gemini is the crypto exchange and custodian which was founded by the Winklevoss twins back in 2014 in New York. We have always put regulation first, and so after the collapse last year, whilst it was obviously very traumatic for the whole industry and very, very disappointing, it was a point where it led to consolidation of a market that we always saw would be coming. And from the beginning of Gemini, we've always built our infrastructure and gone to regulators to ask permission rather than forgiveness. And we've gone as far as even at times sacrificing growth and revenue in lieu of regulation. So we have played it very cautiously because we saw this day coming for a long time. And whilst, as I already mentioned, it was extremely disappointing, dramatic, and we mustn't forget all of those people who were grossly affected by the behavior of certain individuals, which led to the collapse of FTX. We've been here to build a Centurion company, to build trust, to work with regulators, to be a peer to other financial industry players from the traditional space. And that's why much of our, or all of our policies, procedures, when it comes to AML, when it comes to compliance, we very much mirror the traditional space. We were one of the first names on the crypto asset register by the FCA. Our European entity is licensed by the CBI. Obviously, we're going for MiCA in Europe. We have been working closely with the NYDFS in the US for a very long time. So it was a point that we saw coming, but just not in the way that it came along, I'd say.
Hi, everyone. Good afternoon. Yes, a bit of a graveyard shift, but hopefully we'll get through this rather painlessly. I'm Audris. I run business development across EMEA for a firm, Talos. For those who are not familiar with Talos, we are a global financial services and technology company. We focus very much on providing trading solutions and infrastructure to institutions looking to bridge that gap towards the digital ecosystem. Very much as what Stephanie has mentioned, when FTX imploded, as we like to say, a couple of thoughts that came to our mind straight away was around it was necessary. I know it sounds awful, but sometimes you need to have some pain or some teaching moments to actually get better. It's almost like a personal journey alongside in an industry where it's fast evolving. I think the first thing that came to our minds rapidly was around conflict of interest. And it's a very basic sort of underlying principle that transcends across not just in digital asset, but across any sort of businesses that we are running or see today, even through the dot-com bubble and bust before. What I mean by conflict of interest there is around the personal interest and the business interest. And if it's not well managed or aligned carefully, you can have very perverse outcomes as what you saw, as what we've seen in across the industry here. So the conflict interest element then the ripple effect is to have so many other, onset of thoughts and, ideas of how we start to bring in some of the more tried and tested practices. For example, separation of responsibilities, separation of duties, separation of assets. So the stuff that Stephanie just mentioned all comes to mind. And it's not the case that we feel that, you have to have thousands of rules or regulation to fix a problem, or in some sense, some people said in a previous panel that it wasn't a problem, it was a solution looking for a problem. Rather, actually, it just makes the ecosystem much more robust and healthier, because now we have further clarity on certain, unsavory actions that happened in the past.
My name's Dan Moczulski. I'm the MD of eToro in the UK. I also look after the German region. eToro is maybe unique on this panel in that we are kind of long-term stock provision for clients. We're a long-term retail derivatives house. We believe we were the first firm to offer crypto to a retail audience within the UK. So we've been here for quite a long time, and we've got several different products that we compare and contrast. eToro has always been regulated within the UK under the FCA. So it's been interesting for me to see the developments in crypto, how they've dovetailed with what happens in traditional finance markets. If I was to look at the crypto winter and things that I thought were interesting in that regard, if I look at, say, CFDs, if I look at stocks and perhaps look to recent recessions, it was quite common for people to get out of the market. It was quite common for people to say, this isn't for me anymore, I don't want to be involved, and they close their brokerage account and put their money into a current account or a savings account. What seemed to have happened through the crypto winter is people still held their positions. They didn't leave. Now, I accept they didn't add to the positions, but they didn't leave. So that underlying demand, we feel, never left. And eToro, through this period of time, has only ever added clients. Our active number of investors has only ever gone up. And I think this is kind of unique to the crypto audience if I compare it to stock traders and derivative traders. Erwin, are we covering FTX now, or is that the next question? Yeah,
we're still on the intro question with FTX. Yeah.
On the
intro question with FTX.
Okay, and I think where FTX obviously was a problem, and I think we all know this, is firms, unregulated firms have gone bust in the past. Regulated firms have gone bust in the past. Now this process is new for crypto. I think the problem that we all have with FTX, and if we compare it to other firms, FTX was so pro-regulation. From a public perspective. And so I think that's why FTX didn't just damage the ecosystem in that it was a player that wasn't involved in the market anymore. It's because a certain degree of faith within the system had been lost. Having said that, I think, and what is interesting, and recognizing, again, it's been a horrible position for lots and lots of people who were employed by FTX, who had positions with FTX. I think it has unified the position that regulation has to come to this market. And it would only be positive if regulation comes there. And the number of people that you may have said that crypto can exist in an unregulated manner, actually, I don't feel I hear those voices as often anymore.
Hello. Good afternoon, everybody. Thank you for being here. I'm Andrey from Nexo. Nexo is world's leading digital asset company with over 6 million clients globally, and issued more than $7 billion in a credit, and 200 million as a interest paid to our clients. Also, as my colleagues, I'm really keen of the development in the crypto industry. I'm in general in the FX and CFD world for almost 20 years, doing mainly risk management and liquidity stuff. I'm pretty much doing the same in my current company, in Nexo, taking care for all the risks and trying to make sure that everything is doing by the book. It's really interesting to see a lot of things happening now in the crypto space, which were obviously the case in the FX and CFD world in the past year. So it's really interesting to see the development there. So yeah, pretty much that is it. I'm really excited about the panel today.
Thanks, Andrey. Thanks, Erwin. My name's Alex. I'm head of compliance and reg affairs for Galaxy Digital across EMEA. Galaxy is a large financial services intermediary focusing largely on the digital asset world. We cover trading and liquidity provision across derivatives and crypto tokens. We also are very active in the mining and staking side of the underlying technologies and in asset management. I think the question's sort of an interesting one. I think, how do we feel? I think going back to kind of that point, pre-FTX and the cascading events that started perhaps in sort of May, April, I think the initial feeling was sort of one of disbelief in the sense that, okay, I take the point well made that maybe everyone kind of thought something like this would happen, but we didn't expect it to perhaps come from FTX. So I think there was that kind of initial shock, but that did usher in a new kind of paradigm in regulation, I think, and people started leaning on, I think, historically, and largely even today, the concept of regulation in digital assets and crypto is through the lens of AML and counter-terrorist financing mitigation. That is what compliance means in crypto and digital assets. I think if you look at the traditional world, and we have eToro and Nexo here as well, like compliance is much larger than that. Your rule books go far, far beyond that. I think if you stand the FCA's entire rule book printed out on A4 and put it up, it's about over 6 foot tall. It's certainly taller than I am. Perhaps not as tall as Erwin, but we got and I think that really showed that a lot of the issues that are coming up that we've seen today are not new and novel. Actually, the vast majority of issues we see in crypto have got nothing to do with the underlying technology or crypto. It's got to do with people and the implementation or the suspicion or this misrepresentation of trust within the system, and that still exists within TradFi. So I think it worked perversely as a bit of a leveler for regulators to say, actually, a lot of the underlying assumptions we made about this industry are maybe slightly overblown, but we feel a lot more comfortable going in and regulating against what is actually potentially an issue within this industry. And if we leave it unregulated for too much longer, all the stuff that we know and is vanilla to us is just going to carry on happening. So in a way, I think that's a positive thing that's come out the back of it.
Thank you all for your opening statements. And I think you touched on the issue from different points, but wrapped it up in quite a circular fashion. The risks themselves are repeating, leverage, liquidity, etc. This has happened since we've seen it with Celsius and every other Terra Luna and every other collapse since then. I think also what's important to mention is that the technology isn't on trial, or shouldn't be on trial. Rather, it's the providers and the failures of the providers leveraging the underlying technology and the way that ended up transpiring. In political science, we have this term called norm entrepreneurialism, which is usually applied to the way states try to influence the direction through soft power means of how things end up happening in the international system that suits their competitive advantage. From a regulatory perspective, we see regimes that are popping up around the world. The UK is taking its own approach. We have a robust approach in Europe with MiCA, APAC region, MENA. What do you see as the head or the tip of the regulatory waterfall? Is it a Brussels effect? Is it a Washington effect? Is it located somewhere else? And why do you think perhaps that that jurisdiction may have a leg up on the others?
I think it's a tricky question because we're so close yet so far, is how I feel. I've been speaking on panels in the crypto space for coming up 5 years. And I feel like the real progress, especially in the UK, has only really been made in the last maybe 6 or 9 months. I've been hearing a lot of the same concepts, the same discussions on regulatory panels, but the FCA are trying now. They're a principle-led regulator, which isn't necessarily the easiest way, because for those who are having to comply with these new rules and regulations that have come out this year, whether that's travel rule or financial promotions, they're a big lift. Anyone here on this panel having to deal with it, or anyone in the audience, it's a huge lift across all functions, not just compliance, risk, legal. It's a marketing lift, it's a tech lift. And what we're seeing, if you sort of break down certain regulations, they're either coming out of Europe or coming out of the UK. Where one goes, the other will eventually follow. So I think someone on the previous panel obviously used the word harmonization. I can see parts of different regulation around the world that I think, wow, that's great, we could do that. I personally do not see the holy grail yet in any one jurisdiction. So I guess it would be great if people could just sit around a table, especially when it comes to digital assets, and make some decisions on, you know, what works. And going back to the previous question, the problem isn't necessarily digital assets. It's the actions of the firms that are in the space, and especially how they deal with the fiat currency when it comes to safeguarding. I found it really fascinating post-FTX, digressing it back to the first question, but in relation to this, really interesting how, excuse me, certain players in the industry, exchanges, were suddenly like, oh, we're going to do audits, we're going to do SOC reports. Well, big deal. We've been doing that since day one inception, as all good companies should be. There shouldn't be an opt-in situation. So that's my take on things.
Yeah, well, last point around this opt-in or regulation or the transparency. I think there was a general sweeping assumption that centralized means, there's no assurance that centralization gives you legitimacy, right? That there is still that element of the beyond transparency, the regulation around it. The legitimacy comes from going through the motions of interpreting and then actually living and breathing these guidelines and these rules. So in terms of your question around where I think the waterfall or the tip, I don't think any particular region or jurisdiction or law that's about to be passed is going to meet that. I think perhaps Europe is slightly ahead than the US for various reasons. And let's do back to Stephanie's point around rules-based versus principle. The flexible approach allows for a much stronger voice, I think, coming up from the industry, the practitioners as well, which is very, very crucial, I believe, when we're trying to support a sort of newish ecosystem. Why? It's through the practitioner's lens that we can actually better put forward some guidelines and frameworks where we can all exist and harmonize in that way. I think also why I think Europe and perhaps some aspects of Asia will lead slightly above the US for now. I mean, US tends to not do a lot, and then suddenly they come up with something overnight, and everyone just wakes up and go, oh my God. But the key is, I think Europe has been also leading the charge in terms of some of the innovation. So where you have the DLT, the sandbox, pilot regimes and projects, which you see across Europe and also in Asia, that has also invited bring the conversation closer between the practitioners and the policy makers. I think that's very key. So that's why I think we are slightly closer to the tip of the waterfall than the US policymakers. Like I said, for now, things can change. Yeah.
It is an interesting question, and one that I might have changed my answer today than where I was yesterday. I think relevant points are, throughout the world, there is a number of stakeholders in all institutions with slightly varying approaches to what they wish to do with crypto. So I think we can say in the UK, for example, that the current government is very much of the opinion that they would like to establish the UK as a crypto hub. I think we can look at the Treasury with his recent suggestions on stablecoins and how to use stablecoins and how to manage stablecoins. I think we can suggest equally presents that they would like to use the UK as a crypto hub. If I look at the FCA, that isn't as apparent. And I think we can look some years back at the banning of crypto derivatives as a signpost for what they wanted to do with crypto. And essentially it was to say, this is not on our roadmap. That's not happened that way. And I think the direction of travel has forced the FCA to stand up. I think the point that we mentioned before was very, very relevant, that although we're now talking about regulation within crypto within the UK, crypto is not regulated. The actual asset class is not regulated. It's the AML that's affected to it. It's the financial promotions that are affected by it. But the actual asset class does not give you the ability to go to the FOS if you feel your broker has manipulated your positions. So, looking at each and every single territory that is trying to present a crypto market and crypto regulation, I think you have to analyze what are they looking for. And it's clear Asia is keen on this market. It's clear the Middle East is keen on this market. I think it's the jury's out, let's say, on the US, but certainly a lot of people are very vocal that they do not want the US to be a crypto hub. So in terms of what is the tipping point, I think we will only see over the next couple of years. Clearly, I think somewhere we'll get this right, and others will use that as an example to follow.
Yeah, a really interesting situation, by the way, regarding the regulations and where or which region is like leading the industry in the right way. Untypically for US and also untypically, I would say, for EU, I think that these days Europe as a vocation is much better situated than US in terms of crypto regulations. They prepared themselves. They were working few years about this MiCA regulation, which we are obviously facing in the next year. They are giving enough space, enough time for the crypto companies to prepare themselves, to start working on the regulations, to start working on all the process to meet the expectations regarding the regulation, which actually the regulator, why they are putting all these measures, all these requirements, just to protect the retail clients. At the end of the day, this is the goal of the regulator, right? In US, they actually were super open. After that, they were super strict. Now I think they are lost in the moment. In UK, they are now we see the travel rule, now the financial promotions, everything is how can I say really a strict following, which is again good. But I really think that okay, Middle East is also working well with the recent regulations in the region, but still I think that Europe is untypically, I would say, having let's say taking an example, the FX and CFD world many years ago, they didn't great job, honestly, but now regarding the crypto, I think that we need to see Europe as a leader of regulations and the way how they want to implement the regulation and to work with the business in general.
Yeah, I think it's a really interesting question. I still kind of see crypto regulation as a political issue and not a regulatory one at the moment. I think to some of the points that were made, it's still you know, governments that are deciding that the jurisdictions they're you know, kind of legislating in should be hubs, and regulators are given mandates that they may or may not sort of spiritually agree with, and I think that's you know, part of the issue. I think, you know, you can draw a very bright line in the UK if we take that as a case study between, you know, what happened with mini bonds during London, you know, during the LCNF crisis, and how financial promotions were used as a tool to, you know, bring the FCA to heel, and then funnily enough, the first thing that the FCA do when crypto comes here, another unregulated asset, is to close the financial promotions loophole. And I think that is, to be fair, a little bit of you know, politicking in a way. I think the other thing is the industry as a collective has not done a very good job as telling regulators or jurisdictions what good regulation looks like. Frantically, it's still a patchwork. It's still, people will still have their own views. Are you an exchange? Are you really an exchange? Are you, you know, are you more DeFi? Are you disintermediation, which is a completely different thing and actually probably a lot more relevant for regulators than DeFi, if you know, if I'm honest. And so, in the absence of you know, a single voice going towards regulators to saying that this is what you need to put your arms around, I think it's an incredibly difficult job that the regulators have. So when it comes to a excuse me, sorry, when it comes to a jurisdiction that's going to lead the way, I think the first jurisdiction that has a regulator that's given a positive mandate by the government and looks to put a good faith piece of regulation around it is probably going to be at the vanguard of global regulation. But the other side of that is that regulators don't think globally. That's not their mandate. Regulators have an obligation in most countries towards consumer protection within their remit. So the FCA has no remit to protect European consumers anymore, and also to market integrity, and you know, latterly you know, competition, you know, within the perimeter, etc. So I think, you know, whereas crypto is by definition, and everyone loves to bang the drum about it being a global market. Like we want cross-border remittances at the lightning speed. We want everything to be seamless and great UI, UX across everything, and for people to be able to engage on a time zone agnostic manner and move assets around the world. And that's not actually how global regulation is kind of driven at all. And then, and the final thing that points that out is if you go and look at the IOSCO papers, if you go and look at the work of the FSB, if you go and look at all these supranational papers that have been coming out, these are pieces this is really good academic, legislative and regulatory thinking, but it is I'll be quite frank, it is a very privileged Western view of economics and the economy that these guys have, and it doesn't consider the positive impact that crypto assets have in, say, the non-developed world or the developing world, and the positive impact that it has had for people in very, very different conditions to this. And so if you're then going to start looking at, Western economy regulation to be the footprint that sets regulatory standards around the world and start saying, well, no, we can engage with that country and not that country, that's going to create a huge backlash from crypto and the groundswell within crypto, and I don't think that's being addressed either at the moment. So until there is genuine good faith interaction between the industry, legislators, governments, and regulators, I think it's still all to play for, really. I think the UK feels pretty close. The consultation that they brought out, we're going to see what the FCA consult on, next year. We've got to wait for the SIs to be, drafted over here. But I think generally, if they're going to capture, to your point, if they're going to capture crypto as a specified investment and make it a regulated instrument, they say, well, we've got a pretty good, well-iterated, battle-tested set of rules here. We're just going to apply that the same. That feels like the quickest way to get there. MiCA is going to be super robust, but am I going to have to hold a MiCA license and a MiFID license at the same time? That is going to be operationally complex, perhaps. I don't know. The UK feels like a good place to be at the moment, is kind of what I'd say.
I like that your last point also touched on IOSCO. I mean, from a Western economics perspective, there's a heavy US influence within IOSCO, but then a lot of the other countries that are active and vocal are also the ones that were active and vocal in drafting MiCA. And so you see a lot of that cross-pollination and thinking. And I mean, I replied to those consultation papers, so I know exactly where the pain points are. If we could just narrow in perhaps a little bit more on MiCA. So it's done a lot to address crypto asset service providers, custodians, portfolio management, the admission and trading of crypto assets to exchanges, asset reference tokens, e-money tokens. But it's not a complete regime. And there's hallway chatter, let's say, around whether or not we may see a MiCA 2 and what a MiCA 2 could potentially look like, if it's going to include things like staking and lending. What do you view as kind of the key takeaways from MiCA? Like, where did MiCA get things right? And where might other jurisdictions, since we are in the UK, where might the UK, for example, be able to capitalize on some of the gaps and attract the business that is currently still left in the dark with regards to questions that are outstanding, also because we're waiting for RTSs from ESMA? We'll change it up.
Yeah, no, fine. So I think the MiCA question is going to be super interesting. We were discussing this before, and I think there's, harmonization is going to be, and trying to reach that, single marketplace idea through MiCA is going to be super interesting to see how some of the natural challenges are met there. I think the other challenges kind of with MiCA that maybe the UK doesn't have anymore is just the velocity of legislation and the velocity of regulation, and I think the UK believes, and it's set itself up now to mitigate that. We'll have to wait and see exactly how dynamic things are, and in this kind of, it's no longer a new paradigm, I guess, but under this kind of new regime. I think the UK, but what MiCA did really well is that they actually tried. They tried early. They put a really good, well-iterated idea forward, which has allowed and probably, I would say, acted as the foundation for 99% of all regulatory conversation in crypto the world over today. Like they were the guys that set the starting gun off, and they've done the world a big favor. It would be a bit of a shame if they kind of get left behind off the back of it. But I think from a UK perspective, you know, there was a very clear direction of travel that came from Treasury, and the FCA were co-authors of that, to the point earlier about cooperation. I think the biggest point there is that there was an idea set out in February, and there was no deviation from that when the consultation response came out in October, which I think that stability idea is actually more important than the detail, I think, to date. I think the UK, perhaps as a pioneer of principles-based regulation, where there is some interpretation that is naturally baked into it, I think that sets it up very well for to build a good and positive crypto regime. The last thing I'll say though on this that I think is missing from both pieces of legislation, or both ideas, both frameworks, and actually frameworks the world over, is everyone historically has looked at AML/CTF. Now they're all looking at conduct, which actually is, on the relatively easier end of the spectrum if you cover the lot. Prudential regulation is very silent. Like, we're not really hearing anything really positive about the prudential treatment of crypto asset on balance sheets of regulated firms. And if you want to, and those are the very firms that we should ideologically, from a regulatory point of view, be trying to drive intermediation towards, because these are battle-tested institutions that are the incumbents, and they should and are already trusted. But if you have a great conduct regime and you understand and get through some of the issues around AML/CTF in the space, but you have a punitive prudential regime, then that's a prohibition in all but name, because most of these institutions are publicly traded, and you're not going to be able to provide shareholder primacy or return on capital if you've got to lodge 100% of it with the regulator just to be able to hold a bit of Bitcoin. So, that's, I think, a massive gap the world over at the moment.
So it's my turn now. Huh? Look, as I mentioned earlier, I really like this time the approach in Europe, how they start working on MiCA, how they are trying to implement all these rules, and how they communicate this with the whole crypto ecosystem. I really like this. Of course, as a lot of things are happening in a regulatory point of view, a lot of things are happening too slow, and the business is moving faster, So the business is creating new products, new opportunities for the retail clients, for the business in general, which are not obviously in the MiCA scope already. So we need to, as you mentioned, we need now to start looking for the MiCA 2, for example. Even we are not implementing MiCA, but it's normal for business like this. So probably this is the gap where, for example, regulators like FCA, where they can move a little bit faster, they can fill the gap, and after that European guys to, how can I say, to take this example and to implement in the next circle of the regulation. So I think this is how can I say, something which we will develop in the next 2 or 3 years, let's say, to see a lot of companies trying to at least to follow the regulations. Some of them will fail, obviously. Some others will do a better job. We will see, but in general, yeah, with the in time perspective, I think that here UK is having like a little bit advantage.
Look, I don't really have too much to add to what's been said there, in that as a retail broker, we care about the here and now, and recognizing that MiCA is a more holistic solution, recognizing that it covers a far wider remit with regards to crypto. And then I look at the FCA, and I kind of think crypto's been leveraged into existing legislation, but the benefit of that is speed. eToro is currently in a position that we're applying for, and have applied and received VASP licenses all over Europe, and we've still got our eye on 2025 for how MiCA will affect these things. So, I'd almost want that combination of, I enjoy the comprehensive nature of MiCA, but I needed the speed of where the FCA has gone to market. And if we were having this conversation a year ago, I'd say the FCA is slow. But now, relatively speaking, I'm happy with where we are.
Yeah, well, just 2 points on that. First, around the balance in terms of prudential, oversight is also very important. And I think in terms of where the next iteration, so the speed of which adoption of the rules, I think the next iteration will be faster than what we have seen played out in other rule-making or policies across perhaps the traditional asset space. Why? I think because we had a head start. We had we had the MiFID and MiFIR frameworks. So a lot of that has been lifted over, which means that by and large, a lot of the players probably understand where the iterations of where it's headed. What is lacking, sorely lacking, I feel, in this round is definitely anything around to do with staking or lending credit around DeFi, so decentralized sort of liquidity. There's not much mentioned there. That said, though, why I think the iteration for the next rules are going to be quicker, because, as I mentioned before in my previous point, I think we've never seen that much dialogue or the closeness of industry practitioners with policy making and regulators like what we see today. When from a service provider or a tech integrator point of view, we are assisting that sort of dialogue already. We have clients, we have institutions, we have the providers of the liquidity in the DeFi space working together to make the access as legitimate as it can be. So it's not because a rule says so, it's because there's no rules out there at the moment, but because they feel that's the right thing to do. They're setting up the right protocols, they're following the due process, simple things like pre-trade track rules and post-trade checking rules, which means that I feel that the next iteration of rulemaking will come quicker than what we have seen in other asset classes and across time. So that's the positive bit about having a harmonized framework and something that huge and humongous that we kind of bashed through that barrier in the last decade.
A few minutes left, so I'll try and keep it brief. I think great points on both MiCA and FCA. From my lens, whether it be from retail or institutional customers we're serving, whether it's MiCA or FCA implementations, I think there's still quite a disconnect in whether that's prudential regulation, FCA regulation, etc., embracing the companies that are still trying to do things properly. So on one hand, you have various regulations coming down the line, for example, from the FCA, but we still have a big disconnect between those banks who are allowing or mostly not allowing transfers into crypto exchanges, as a particular example. There has to be a rationale and a more balanced approach to this. What is the point of being one of those names on that list, abiding by these rules, best foot forward from a regulatory perspective, if there is just going to be a blanket ban on all crypto transfers? I was at another panel a couple of weeks ago, and someone from HSBC stood up and said, until someone can explain crypto to me on an A4 sheet of paper, I'm not touching it, and I'm going to block all transfers forever because it's all fraud. I'm summarizing, and it wasn't verbatim. The reality is, yes, there is a high level of fraud via certain exchanges. Gemini's fraud, I can say, is substantially lower than another exchange's fraud. I won't mention the name. But there has to be differentiation between the players that are doing things properly and the ones who just don't really care. And again, back to the prudential piece, my worry is that, for example, I had a great meeting, Bank of England earlier in the year, met Sir John Cunliffe, super friendly, very curious, understood the space to a reasonable standard, had a great conversation, but his view was sort of like, great, good luck to you, but right now you're too small, we're not going to worry about it. But this could change overnight. People want access. The big banks are creating ETFs to give customers access to crypto. Retail customers are going via CFDs, for example. So the demand is there. We have to create that safe space via whatever regulation to embrace, nurture the right companies that can service all customers in the right way.
Great. I'm just taking a look at the clock, and it seems we may have run it down. I don't know if anybody just wants a very brief closing statement, and then we can wrap it up.
I'll go. I think there's no silver bullet. I think people often come and say, first, those who enter, maybe the few years ago, they come in with the bright lights thinking, oh, this is a great party I want to be part of, and I'm going to extract rent from it. As you mentioned, though, there's those who actually firmly believe the underlying thesis of what what the technology brings, so blockchain. This is really subtracting the difference between technology from the investment thesis. Right? We've touched a lot on many layers here. If we look at this and from I call it the layer cake approach, then there is no silver bullet. It's not like a whack-a-mole game where you guys know what whack-a-mole is, right? The amusement park thing. It doesn't mean that you move offshore or you go to another jurisdiction, you're going to be happier or you'll be able to operate and do what you think you can do. I think we got to embrace regulation because it is a huge positive step for our industry as a whole, for us to be not just legitimized, but actually transform and embrace the technology that underpins and drives what actually digitization can bring to, in this aspect, the financial services around representation of economic representation of value, of store of data value.
Yeah, I totally agree. I think, as a retail broker, what we'll see over the coming months is actually what impact regulation will have on this particular asset class. When it has to be accepted, there is a proportion of the people that hold the asset class that are in it for its decentralized, unregulated nature. Now, if I look at when the ESMA leverage limits came in for CFDs and FX, we can all see the impact that had on the retail audience. We now have a situation where we have vibrant regulated brokers with regulated clients. We also have a pretty vibrant unregulated market and loosely regulated market within CFDs and FX. Now, the new legislation and the new regulations that are coming in for crypto at the turn of the year, including a cooling off period of 24 hours, including the financial promotions work, including the appropriateness and suitability for crypto. I just wonder what impact it's going to have. Will it scare people from regulated marketplaces, and will it send them abroad and offshore, or will it keep them in regulated territories? It'll be interesting to find out what happens.
Okay, well, thank you everybody for joining us, and thank you to the panelists. Obviously, everyone here comes from a different part of the industry, and it was great to hear your insights on these very topical and fast evolving challenges. Thank you.
Thank you very much.
Thank you.
Thank you.